Welcome to Safe Money Retirement Radio with your host, Tim Wood. Tim is a retirement and income specialist, certified financial fiduciary, and founder of SafeMoneyRetirement.com, primarily serving Western North Carolina, East Tennessee, and Southwest Virginia. But he's sought after nationally for his expertise in helping people secure their retirements. Mr. Wood is a licensed life insurance professional in multiple states and specializes in working with people who are near retirement and those who are already retired with wealth management, income planning, and asset protection strategies. And now, here to talk with you about securing your retirement, your host, Tim Wood.
Thank you for joining me this week. I'm Tim Wood, host of Safe Money Retirement Radio. I specialize in asset and retirement protection and income planning. As you probably already know from listening to my show, I'm not too fond of too much risk. Now, that being said, some risk is worth taking. For example, having children is a risk. Those of you that have children know this to be a fact. A lot of time and money, not to mention blood, sweat, and tears, goes into raising children. And even if you're the perfect parent, it doesn't always turn out the way you want it to. Almost everyone I talk to that has had a problem with their child has said that they still love that kid and wouldn't trade them for the world. You could say that children are a risk worth taking, but some risks simply aren't worth taking. Jumping out of an airplane without a parachute would fall into that category. I don't think any of my clients would argue with that, or they wouldn't be my clients for very long. How about taking a risk you don't have to take? People take some risks with their retirement money for no good reason. Wouldn't you rather have a retirement plan based on potential benefits while limiting risk? How about a guaranteed bonus of up to 10% or more? Or how about a guaranteed income account value growing at up to 7% for the purpose of receiving guaranteed lifetime income? How about the guarantee that your principal and credited interest based upon the performance of an external index can get locked in and cannot decrease due to market losses? That means you get to retain your gains. Even more important, if the index is down, you might not get any credited interest for that period, but you can't go backwards. In other words, these contracts are guaranteed that index losses will not cause you to lose any previous gains. The guarantees provided by fixed indexed annuities are backed up by a contract and protected by the claims-paying ability of highly rated insurance carriers. Methods for crediting interest differ among products and carriers, so it's essential for you to understand the details to make an educated decision. These are long-term retirement strategies and should be looked at carefully. Still, your retirement is not a short-term strategy either, so getting the most out of the benefits of a fixed indexed annuity is something you really should consider. Why not limit the full impact of market losses on the money you depend on for your retirement? Call us now for your complimentary copy of my Safe Money Retirement book. It's a guide to retirement strategies that will show you how to protect your money from unnecessary fees while limiting the impact of a market crash. Give us a call anytime, 844-905-SAFE. That's 844-905-7233. Now let's talk some more about the risks we take in life. How about buying a home? For many people, buying a home is one of the largest purchases they will ever make. What risk do you have when you buy a home? Well, for one, you have the risk of market value loss. Many people learn that during a housing market correction. Some people think there's no significant risk of their home going down in value until that point. A housing market correction will quickly change that perception. What about the risk of property loss? Flood, fire, earthquake, windstorm, and theft are all things that could destroy the value of your home investment. Now, I'm going to ask you this question. What do you do to protect yourself from financial loss when you own something of significant material value? I think you know the answer, right? It's insurance. Insurance costs money, and nobody likes spending money on something they will probably never use. So why would you buy insurance on your home? You might say, well, I have a loan on my home, so I have to buy insurance on it. Now, that may be true, but what if your home was paid for? Would you still buy insurance on it? I bet you would. I bet a bunch of you out there listening are. But why? Whether you realize it or not, you would buy insurance on your home because of catastrophic risk. Catastrophic risk means that you have a chance to lose a lot of value if something terrible happens. We buy insurance on our homes because insurance costs are minimal compared to the loss we might incur if a catastrophe occurs. Am I right? You know I am. So let me ask you another question. Why don't you have insurance on your retirement money? Shouldn't you? Shouldn't you give us a call now for your complimentary copy of my Safe Money Retirement book so I can tell you how to insure your retirement against the full impact of market losses? Just give us a call anytime, 844-905-SAFE. That's 844-905-7233. And also make sure you ask for our customized Safe Money Retirement Information Kit when you call. Fixed indexed annuities have the potential to insure your retirement money against many catastrophic risks you may be exposed to in your retirement years. To name a few, what about longevity risk, spousal survival risk, long-term care risk, or loss of principal due to market risk? Once again, give me a call. My number is 844-905-SAFE. If your retirement is worth at least as much as your house or more, why isn't it insured? Don't you think it's time for you to start insuring one of your most significant assets? Your retirement money. I hope you've enjoyed Safe Money Retirement Radio this week. Unfortunately, we're out of time today. Thanks for listening, and until next time at the same time, I'm Tim Wood reminding you to stay safe so you can step into a secure future.
You've been listening to Safe Money Retirement Radio with your host, Tim Wood. Find out how to contractually guarantee that your hard-earned money is safe while avoiding market loss so you can have the retirement that you deserve. Call Tim Wood now for your complimentary Safe Money Retirement book and information kit at 844-905-SAFE. That's 844-905-7233. Or contact him online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base annuity contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or a death benefit unless specified in the annuity contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Listeners should be aware of IRS penalties for withdrawing funds from an annuity before age 59 and a half. Fees may apply. Annuity guarantees are based on the insurance company's financial strength and claims-paying ability. No information presented today should be acted upon without meeting with a qualified licensed professional. Obviously, by calling us now, you are taking just the first step towards protecting your retirement. It is important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice. The market goes up and the market goes down. It always has and it always will. But if you are in or near retirement, do you have time to wait for the market to go through these cycles? Think about it. Having your money invested in the market is like walking next to the edge of a cliff. What if you lose your step? What if the edge gives way? What if a strong wind blows you over the side? It's good to stay away from the edge of disaster in life. And when it comes to being exposed to financial risk, it's no different. Shouldn't you at least try to protect the money you depend on for your retirement income? Call now for a complimentary copy of the Safe Money Retirement book. Our number is 844-905-SAFE. That's 844-905-7233. Are you age 59 and a half or older and still working? Did you know that you may be able to move some or all of your retirement money to an individual retirement account without any taxes? Why keep your money in your employer's plan with management fees, exposure to significant market risk, and limited options for guaranteed lifetime income that you cannot outlive? What will happen to your plan at work if the market crashes? Call Tim now for retirement planning that will protect what you've worked so hard for and create a retirement that is safe and secure. Call 844-905-SAFE. That's 844-905-7233.